Hello, everyone. Like I said, I've traded in the dog for crutches. Yay. I lose these when I go to bed tonight and the boot, so I'm very excited for that. I should be feeling better, hopefully, next week, and then, back to baby watch. Okay. Market has been doing some crazy, crazy stuff. Let's summarize not only the day, but the week. A lot has gone on. Okay. So let me share the screen. Today was an up day, but let's focus on what moved. Rates were up. You saw the job number today. Let's see what exactly moved in the markets. Okay, so this pretty much summarizes the week for a lot of people. S&P, I have the number below, but a lot of money's people on fire and such, move into gold, as it were. Interesting moves in the markets. We're also going to recap, like we do on Fridays, not only the week, but the year. So here it is first. My crutch had to say something. Today, the UK, really associated with value as well. But so today, the big movers up. If you own UK utility stocks, they climbed about 2%. So they were on fire. We'll take a look at the chart, and volatility dropped 5% as measured through VXX. And then this week, pretty interesting. There were several movers up and down. I didn't really want to focus on the up when the S&P is down 3%, which if you annualize that, that is a lot of money lost. 3% is horrible for a week. But it was led by the drop in the banks. The 9% drop in the banks was horrible. Just literally a week or two ago, I was really excited about, XLF being a purchase, and everyone said it looks great. I think it was the leader of the year through the first 2 months, especially as it lagged through some of last year. And now it's had a horrible, week. We'll take a look at one index or one financials ETF that specifically got hammered. It wasn't your typical XLF or, at Carry did bad, but we're going to look at a specific one that really was down hard, down 9%. And then you had 13%, 13 to 14% jumps in Vol and Nat Gas. And Nat Gas, man, I wish I had more in it, but the Nat Gas, as I said, when I wrote in January in Chart Advisor, saying that Nat Gas potentially belongs in your portfolio. This is one of the best trades of the past year. We're going to look at the trades from last March 7th through today, leading in absolute value, and they're all to the upside, although there are some drags in big losses, but we'll take a look. All right, so there you go. That is the summary for the day and the week. We will get a look more intensely on the charts in a little bit. Okay, so let me share the proper screen. This always takes a little while. Hi, the weekend is upon us. I hope everyone has some good plans. Jesus is Lord. I've clinged to him this week. It's been a challenging week. Where's this screen here? There we go. Boopity boppity. All right, so I'm not going to pay attention too much on the single movers. Broadcom really turned around the markets today, or helped, up 8.5%. That was huge. Lifted Tech, Palantir. Now it's below 90, but it had a big day, up 5.5%. MicroStrategy down 5%. Today was the big, quote unquote, big crypto summit with Trump. We'll take a look at what that did in a second. Costco down 6%. You don't usually see that. Financials, you see that drag. JP being down 1.7%. And we'll take a check on Bitcoin. I think it was at 86,000, 87,000, call it, down 4%. Not a great day. Sell the news type thing after that event. Let's see how it trades this weekend. On the intraday, really fast on the SPY. So here is the job number. You could see volatility here, and then a lower close as we went into the day. And then as we bottomed at 11:30 a.m., we went all the way to 5. I'm going to round here, but we went to 566 in SPY, which is not a great level. We'll zoom out and I'll show you the level that is to me super duper important. But first on the micro, and then we started to rally here and basically started flirting with almost as high as 578. So volatility is here in grand scope, and as you can see here, volume weighted average price VWAP was at 573, and we held that above, pretty much tethered to that 575, 76 handle. As we zoom out, so again, the bigger picture here. So that's black line. This is what we've been calling for a long, long time. That black line is the 200-day moving average, the big kahuna. Everyone's looking at it in the S&P 500. From here, it's 572. I'm rounding, and we were at 576. It essentially held right to where it had to. This was even a bigger scare, essentially getting closer than obviously what we did in Yen-Mageddon or any other day, even the prior, technical 52-week low, which was last April at 494 in SPY. Okay. Not oversold. Okay. Like I said here, you didn't get that bullish confirmation. Here, you didn't even scratch a 70 RSI when you're getting new all-time highs. Typically, when that happens, that's kind of like a super micro move. You're going to get usually it's going to fall out pretty quickly, and that's pretty much what happened. We've slid. What is that? The highs were on February 19th, so just in about 2.5 weeks, we've gone from all-time highs to the 200 moving average. We technically did held right where we had to. As I zoom out here, I believe we will. I thought, for the lower bound, we would be right around 578 in SPY. So weaker than I thought. I didn't think this 200-day was going to be this close in question, but the trampoline held right where it had to. And I think that, fat person is going to hop right back up, but we'll see. Basically, I think the next rally is going to get you to about 593, and I think that's going to take a lot of work. There's volatility that I think the market's going to embrace and take that higher. You also have that end of Feb into March seasonality ending, and I think people might sniff out positive earnings kickoff in mid-April. But I think stuff got pretty negative. That was quite an unwind, if you will, from February 19th in just 2.5 weeks. And we'll see what they're rotating into. It might not be what you exactly think in size. So again, I think we base here around, and I said this week, I think we bottom, and I thought it was going to be in the higher than we were. I said around 580, or within 1% of that. And yeah, I think this next rally of the next 2 to 3 weeks takes you to about 595, right where my cursor is, which is essentially the highs from the week of February 25th. And then I think you have significant lid on the rally at 610. Looks like there are massive sellers there just waiting. And they've been waiting essentially since December. And they essentially still have kind of the power there. So that's all it is. So again, I think we've kind of exhausted our selling to the downside. Could be some, obviously, a little bit more volatility ahead, but I do expect this 200-day still to hold this 572 in SPY. And I think rallies in the next 2 to 3 weeks will take you to about 595. So that's 20 points, or about, it's not a massive upside, 3-4% or so. And again, significant lid on the market at 610. All right, let's get into some charts here now that we did that. There were some big movers. So let's get to what really moved today. All right. EWU. So Europe has been having a moment. The UK has had itself a day. Go get yourself some biscuits and tea. Up 1.5%. That's big. These guys hit new highs on the 5th, 2 days ago. And it's not all-time highs in the life of the ETF. That was back in October 2007. But if you look at this, and I mean, there's really rotation into some previously underperforming areas. If this, I'm just looking at a 20-year. This is actually a super max chart. What is this? This is a 28-year chart. If the UK can take out $38 here with confidence, it takes a little bit while to do that. The next target would be these 2014 highs at $44. And, with the movements in the dollar, I actually don't hate this trade. So it's had a fire day. Rates were up here in the United States. As I zoom out a little bit here, or zoom in rather, go into a 1-year chart. I like this trade. But again, this isn't a super high volatile group. I like the 200-day moving average is kind of a tank here, holding at 36. That's a great point of entry. Fully targeted to the upside. I like about 37.5 to 38, so I don't want to chase it here, but this is a good-looking chart. Had some scary times here from basically mid-November, all the way through just honestly a month ago, and now we're looking at 52-week highs this week. So UK looking good, had a fire day. Typically don't cover the dividend type stocks, but you're going to see these today was massive movers. This was the most liquid and most traded of the dividend ETFs. You've seen all of them today up at least 1%, which is big for them. So this group, and I'm looking at the Schwab US Dividend Equity ETF. Okay, this thing peaked Thanksgiving week at $30. This isn't a huge mover. After those highs came in November, this thing had an ugly movement, if you recall, after the Fed cut December 18th. It actually went from 52-week high, kind of emblematic of what we're seeing in the market here. We went from highs all the way here, and then you actually got to oversold. It went to under the 200-day moving average. So this had a fail, and then ended up being about a 3-week scare, and then it popped back up, and now here we are, and it's had a really nice day today. Longer term, what do we think? Next couple of weeks at least. I don't love this group. It kind of hit that resistance at 28.5. It has not been, if you zoom in here, it's not really been able to take that out ever since December 10th, the week before the Fed cut. I think this has been a good bit of exhaustion, like a nice rally here for the past 3 weeks. Don't love this group. I think it kind of bases and hugs about that 28.10. So right where my cursor here is, there are a lot of convergences, moving average there. It's kind of a level that's been contending with since Labor Day. So not insignificant at all. And to the downside, I still think this potentially gets sold to about 27.5 or right at the 200-day moving average. So I think this has had a nice rally. If you're in these names, I think this sells off for the next 2 weeks if you're in this, or next week or so before it starts to go higher. Okay, and then last for the big up moves for the day, utilities. Like I said, today was a bit, rates were up. So this group was up. Utilities up 2%. If you remember, this group was all the rage back literally Thanksgiving week. This thing traded to $83, did XLU. And now look at this. Great looking chart, though. If you recall, this was like the best sector of 2024. Bottom last April. And look, not even one test or let's say one close here under the 200 moving average. It came yesterday. So now what do we think of this group? Interesting chart given all that. So as I look here, kind of like what I said about the market, actually. So I think this is going to base around 76. I love if you enter this around, I mean, this is a superstar win to its back. I mean, you can't hate on this chart. If you were able to establish a position here at 76, I think this is headed towards 78.5. Again, this is utilities, a slower mover, about $1.30 ATR or average true range on a $77 stock. So not, moving. This isn't, Tesla. That actually tends to move down 7 weeks in a row. But yeah, Tesla looks exceptionally weak. We'll look at momentum in a little bit in ARK stocks. But yeah, so if you establish a position here at 76, I like this. I think this goes higher over the next 2 to 3 weeks towards 78.5. There is for sure, a really a lid on this as well, almost similar to what I said in the market. A lot of different areas in the market, there are these gaps. And it's kind of like just seismic when you go through fractally through the S&P. You see it in SMH, you see it in the Qs, you see it in SPY, you see it here in XLU. So this has a hard lid at it right at 80.5. So love the establishment of a position at 76 to go towards about 80.5. And I think that's all it is. Okay, let's go to the losers today. There was only one, and this is going to be a much referred to chart because it's been, talk of the day and the week. Volatility. So on the day, it gave back 4.5% or so, 4 2/3. So I thought this was going, or what we've been saying is this is looking for 51 to top out. Basically the opposite of what I'm saying when the S&P is going to base around the 575, 580 level. I'm looking for VXX to essentially top out right around that level. You don't want to see it establish higher highs. So here you had some, the 200-day moving average is something we should pay attention to, is starting to go up now in VXX. Now, that's not a time series chart. This is the short-term futures ETN, but it's not a great sign that, of course, the bars are getting larger, but the 200-day moving average in VXX is starting to go up. That does give me some broader market fears. That if you remember what we were doing in nat gas, like in November, December, when it was not a great, great looking trade, then it was still kind of to squeak out a rally. That's all it had to do. Start to do. You had to get the 52-week low behind you, and then the 200-day moving average has to at least stabilize and then start to curl up. And it typically happens with a week or two of closes above that. Here's I guess that was the bad news for the market. Here's the good part. I think this has exhausted itself for the time being. I think this moves towards 46 over the next 2 to 3 weeks. Here's the problem. The 200 moving average is 47.25. So I do see it clipping underneath that. But if this were to stabilize and there's some more fear in the market, that would not be great, and that would have more people clinging to puts and higher VIX ratings, and you're going to have more fear than there was greed in the market. So that gives me kind of a counterpoint to upside in the market. Again, with the technicals and the charts, a lot of lids on the charts. Top 3 gainers the past 5 days. No repeating charts except just to mention for dramatic effect. Number 1 gainer, what we were just talking about, natural gas, up 14% this week. Okay, so as we were saying just in the past, okay, so when did the 200-day moving average start to stabilize and start to go up like VXX is? January. Okay, right what that happened after that, I mean, of course, each asset is different, But Nat Gas was starting to have breakouts, and the 200-day was starting to go higher 2 weeks after that. So it is a very important, tenuous, very important critical time. Nat Gas, the best week of any asset to the upside this week, a 14%. My boy Chris, I know you're out there. Enjoy it. Enjoy these gains. Absolutely crazy. So what now for the actual chart? Kind of similar to what we said with the UK stocks. I like it to the upside in terms of movement, but this is fully valued to me for the time being. It had a nice day, up 2%. Right here, fully valued is I have another chart up for a different time frame, but my full value is right around 23. What do I have here? 23.60. So right about where my cursor is. So don't love chasing in here, but I think it does go. The momentum is obviously to the upside in this, and I still. We were calling about where's a reasonable target. This was a very messy chart. And we just said, if you can slap a 1 year 50% Fibonacci target on it and then see where breakouts are, it took us to about $20. And look at that breakout here. There's meaningful, significance in that. It was where the 200-day really started to pick up slope, as well as the breakout 6-month highs in mid-January. And then woof, now you're 52-week highs. So, and technically, not terrible. To see, wrote about 2 months ago. But Net Gas, the best week of any asset. If you own this, congrats. The second best, and it lets me know that there's fear out there. The second best was volatility, and that's why I wrote it in the recap at the top. Vol, it was down 4.5% today, yes, but on the week up 13%. So as you can see here, again, like we just talked about, 200-day moving average. Don't love that this is going up now. We haven't seen that for quite a while. You can tell this black line just goes one way. And so now in terms of closes above it, you've had this thing March 3rd, we're closing above the 200 moving average. I do not want to see, VXX above 47 in a couple of weeks. If that's the case, that's not going to give me warm fuzzies, including, many algo program trades. It's not going to be a buy calls environment, and then dealers don't have to hedge, and market just stocks will not rip. You're not going to get new highs, at least in the areas that you think. And then the next one, speaking of which areas you don't think. So one area that actually absolutely ripped this week, KWEB. Okay, so 9% for KWEB. If you were in Chinese tech, congratulations. This group's still trying to get to these October highs when that crazy exuberance after the, Xi announced the stimulus. It sent this ETF to 39. It's getting very close. It's at, essentially 37 today. What do you do here if you don't have a position? And this is one of the absolute hottest trades of the past year. Teaser foreshadowing for later. So this still does have volatile moments. The 200 moving average is 30. What an extraordinary, place of entry. Again, they gave you those chances back at the end of January, and that was about it. It's been on a tear since 30 to 36. Like I said, very volatile. This is $1 ATR on a $37 stock. So if you do the quick math, this moves 3 times as much as utilities. So of course, then you can size it appropriately in your portfolio. You have a third of your China holdings versus you would in your utilities, and you kind of make a, kind of a basket pairs trade. Anyway, went on a tangent. So again, like I said, this one to me fully valued around, I have here on a calculation at 37.5. So I don't love chasing it right here, potentially 37.75, because this thing lives in volatility. But a better entry would be around 34.5. You possibly get your opportunity, but this thing, similar to like Nat Gas, I think this is to the upside over the next 2 weeks. And again, just to give a tease towards the end of the show, these are some of the best trades of the year. It's semis, they rolled off. They're not there anymore. Bitcoin, not there anymore. So there has been a change, and we're looking at 52-week lookbacks. This isn't 1 month or 2 months or even 6 months. I'm looking at stuff from last March till today, and you'll take I'll do that at the end. So again, KWEB, if you can get an entry right around 34.5, I like that much better on your way to 37.5 target, which it seems to be closing in on. And today, pretty much flat. Okay, top 3 losers of the past 5 days. Again, if you have a ticker or something, put it in the chat. We'll take a look at it. There were some crazy moves today in the market. All right, top 3 losers of the past 5 days. No repeating charts. I just always say that. The bank. So this specific index, I alluded to it before, down 9% this week. Ugly move. XL didn't get hammered. KRE was close after this, but this got more a hit. I believe this is like equal way. So what, or very close to equal way. So 1% Bank of New York, 1% JP, Citi, TD Bank, whatever. So these guys peaked February 7th, about 2 weeks or so before the general S&P. And again, this has had big moves too. And again, so not a very clean breakout. I mean, yes, it did have, this was new 52-week highs, but again, you didn't get that real bullish confirmation. At least on new highs, like to see over 70 RSI. The measurement of RSI here was 60. I'm sorry, was 63. So don't love that. And then typically you can kind of not rely, but you can kind of don't be shocked if you see a big move the other way. So this went from a $72 move, $72 stock, all the way to just coming within a rock's throw of the 200 moving average. I mean, really, I'm going to round here, call it $62. This thing got to pretty much $62. Was that, today. So financials tested specifically through this basket. And now what? Still like the group, not one close. How many charts can we say this about? This thing bottomed last April, not one close under the 200 moving average. The closest it got was today. That is scary. It was oversold first time this year. So that I don't love that, but it could be, capitulatory and thinking that is it. I love establishing position here around, honestly, anything under 65.5. I think you're getting this on sale. I think this is a good sale to be had. Yeah, again, say 65. I mean, if you're really getting this cheap, and I think bounces on this, again, emblematic again of the market, I think this does rally to 68. After that, though, I think it gets tired, and I don't think much more happens. So these highs back here at 72, I think you're going to have to don't hold your breath. It might take a while. But this looks a little oversold, literally, figuratively, and technically. And I do think bounces on here get you to about 68. So from 63.5, what is that? $4.50. All right. So like this group for the next 2-3 weeks, it's not going to be a straight line though. All right. So, but this group, horrible week, down 9%, almost an average of 2% a day. Absolutely got shellacked. Speaking of Tesla from before, so momentum was the second worst area. So financials, banks are not technically, momentum, not a ton in here. Momentum, this is like your Teslas, Netflix, Roku, etc. These guys, very similar with the market, this MTUM, which is a very popular liquid momentum index, peaked at $230 on February 19th. And again, like the whole market rolled over very hard. These guys, their 52-week low was on the Yen-mageddon. Okay, that's really the last time these guys were significantly tested, and now it happened. It did not close below the 200-day though. It's very, very close. It did it by 60 cents on a $200 name. So it did it by the skin of its teeth. And again, kind of similar for like the whole market. It's a little bit overdone, in my opinion. I think this is a good deal. I mean, honestly, just given where it's been, I think this is good. And again, this is momentum. This is a $4 ATR. It is a $220 name or $200 name. But I like having a position in this under 208. So giving yourself a little bit of slack. I don't think, again, this is going to be a straight line up, but I do think bounces on this take you to about 217. That's 13 points of upside. Today was flat, potentially bottoming here. Okay, if you look at the candles, that's what it kind of looks like to me. All right, so that's momentum. So like not super warm fuzzies to the market, basing this week. And then, like I said, probably gets you the SPY to that 590, 593 point, then it's going to run out of gas. So tenuous environment. I'm really, that VXX alignment you're going to see in VIX too. It's probably rising sharper in VIX. It gives me a little bit concerned not exiting the bull market at all. SPY did what it needed to. But like there are things that are keeping me alert. And then like the last big loser of the last week, the energy complex, specifically through XOP, down 6% this week, or more than average of 1% a day or so. It hit a 52-week low on Wednesday at 118, and it's kind of come back to 122.5 today, up 1.7%, but down 6% on the week. We've been calling for this group to go lower. We said it does not look well. And then of course 200-day moving 52-week low came 2 days ago. So again, I'll throw this, like I said with everything else, I expect this to base this week right around 123. So right where my cursor is. And I do think you'll get a bounce in this for the next 2 weeks or so to about 131. So if you want to place a tactical trade, I think that's what you're going to get. And this 200 moving average continues to look heavy. No interest in owning this for long term. That's XOP crummy week. And now my favorite part, top 3 trades of the past 52 weeks. I could probably do it on my crush. Let's do it. Hold on. Drum roll or steel roll, whatever that is. All right. So best trade of the entire market from last March through today, March 7th, okay, is unbelievable FXI. So we all went from, many of us calling this space uninvestable to it is the leader in the market for an average for up 58% over the past year, or more than 1% a week. Absolutely astonishing. This has about a 90-cent ATR, crazy for a $37 stock. So as I say here, you can look at KWEB for signs. Obviously, this is FXI, the most liquid China basket. The highs were, again, when that Xi stimulus was announced back on October 7th, it hit 37.5. You see where it is here. It's at 37 essentially today. It was what I said before. I love an entry in this around 34.80. A lot of people have been chasing this higher. If you got to pay, 35.10, it's a ways away from here. The trajectory, I believe, for this is more chasing for the next 2 weeks. If you do have pullbacks anywhere to that 35 handle, you should probably get on it, because this looks like it's going higher, and this is just numbers, no narrative spin, the best trade in ETF land. It's not Bitcoin, it's not semis, it's not silver. It is FXI, a 58% year over year. That's it. Mic drop. Bang. Next, it's what we talked about before, and from when you get these moves, the rubber band goes rip roaring the other way. Hopefully we see it in SPY. I'm not sure if the technicals are all there right now in terms of a rip, but nat gas was similar, and big volumes speak when the sentiment changes. Like I said, the 200-day moving average starts to curl, it flattens, and then it starts to go. Right now we're going to VXX start to go. I'll pull up SPY in a second. What its 200 days is doing, it's still rising. But here UNG, as I said, I'm not going to talk about it again in terms of where you want to position and where it's valued. What the heck, I will, in case you missed it. But if you can get in here around 21, like literally right around here, 21, that would be a nice slide. This thing still is volatile, up 2% today. $1 ATR on a 23 name. If you get an entry around 21, that would be great. And again, fully targeted for me to the upside is around 23.5. So I don't like chasing it right here, but that's not gas. That's the second best trade of the year, up 45%. So just behind China. So this is a winner's portfolio of the past year if you're rotating into these and following these trends. It's China, it's nat gas. So Americans, the SPY portfolio constituency is not allocated in that a lot. It's not allocated in nat gas. What's number 3? Also something that SPY is not involved in heavily. And so that's why, if you're in indexes, you're not really having a fun time at the moment. But gold miners is the number 3 best trade. And this is almost tied with nat gas, just a touch behind. Up 41% is gold miners. These guys peaked in October, just shortly, right around that China news. And these guys were giving you a sale here. It got scary when the Fed was cutting, and then it got its legs underneath it right around Inauguration Day, actually. And then overbought conditions, but it cannot break out above 43. Again, the highs, 52 guys are at 44. And then here we are. So now what, as I close the program here, GDX. This one has a little bit of, I think you could possibly chase this. I like an entry here around, again, the 200 moving average is at 38. Okay, this one is, a bit of a mover as well with a $1.10 ATR. Is what it moves pretty much in a day, up, down, and it's a $42 name essentially. So I like entries here around the 21-day exponential moving average, which is 40.5. So look for a little bit of a dip potentially, and then to the upside, I think 44. I think it does have potential. I like the chart, and I think it possibly has that move ahead of it. So that'd be a nice almost 10% or so move. So gold miners looks great. And again, this thing is the 3rd best winner of the whole shebang. How are we doing on time here? 28 minutes. The other thing is, because it's something I look at. Let me see real fast. Hold on. Let me see if I can do this, because it's something I look at and I think it's really grand. Where's the screen? Maybe I'll just do it next time. Oh no, hold on. So 52-week percent changes. Okay, so for the declines, it's pretty wild. These are 52-week changes. These are the big losers this year, and there were some that contended with it. I don't really count the cannabis space, down 62%, but it's a $3 stock or ETF. The Ethereum, this isn't a popular one, but there is some ARBs that you can play with some of these. The Ethereum ETF is down 47%, and it sounds wild, but the Bitto ETF is down 37%. So you do have IBIT up. We talked about before that you can kind of have that ARB trade, so you can kind of capitalize on the volatility of Bitcoin, but you do have to manage the position. That's down 37%. That's a huge mover. These are the losers. I'll go to the winners in a second. TAN, that is still trash, down 27%. One of the biggest losers. Brazil, still one of my shorts, down 25% year over year. Again, ARCG, no bueno, down 23%. And then we'll we'll stop with this one. Mexico down 21%. Let's look at the winners, and then for real, we'll wrap it up. So there's your FXI at 58%. What a monster. And then if you look at the correlation here, or the dispersion, the KWEB is up 48%. So you're better off, not just Baidu, PDD, VIPs, and whatnot. You're better off being in the general FXI. So you're long real estate, consumer discretion, etc. Different aspects of that economy. Nat gas right there, a 45%. Absolute monster. You have to look at allocating towards these. These are not just short-term fads. Like I said, these are durable trends. Again, I picked GDX for the liquidity. It's much more liquid than the juniors, but they're both up massive. The juniors up 44%, the majors up 40%, and then you look at other trades. So silver's up 36.5 through that ETF. That's like the baby one, PSLV. But the metal. So yeah, very inflationary. Shouldn't give you warm fuzzies in the market. And the last thing I'll do here is, hold on, as I go back to the screen for real, I'm going to wrap up after this. I just want to do one more thing and go to the SPY. We can all go have a great weekend. So the 200 moving average is still rising here. Whoops, I actually want to go to SPY. Just makes things a little bit simpler. So here SPY, you can't really get too concerned about it just yet in terms of like the technicals here. So it didn't close under the 200-day. It is still rising. We're going about 20 cents a day. It is slowing. But if this starts to have a lid on it, this 595 for a while, then you're going to definitely see my bullishness change. Like a friend texted me that, you still bullish about the market, or is Trump ruining it? Verbatim is what he said. And I said, I'm still bullish on the market because it's resilient AF, and you kind of have to be, honestly. But if we start closing under 5,700 for at least 1 week to 2 weeks, I'm going to change my tone. And of course, that day we touched 570 in SPY. We rallied right where it had to. A fat person essentially got right off the trampoline when he had to, and hopefully the rubber band rips back. I think we head back towards the 595, like I said, and then probably more fear ahead. Hopefully it lines up with next quarter earnings, and who the heck knows what else can lift up this market. As for me, Friday night, feeling all right. Peace.